Now we're in the digital age of insurance. What does that mean for the insurers and the customers?
So I think the right way of looking at this digital age is to look at 2 or 3 dynamics within there and see what we can learn from the past and see how that could be applied into the future. And there are 2 or 3 changes coming together in the digital age. So one of them is around the Internet of Things and sensors generally. And if you go online and you look for consensus of opinion, you'll see that almost everything that could be sensed about our environment is now being sensed. So everything from how, when and where you drive to what the temperature in this room is, what the air quality is, and in commercial things, for example, where a vessel is and how it's performing, etc. So that data from those sensors is massive. If you look to pick up any stats at all, it's measured in tens or hundreds of billions of sensors. Effectively means that everything which was previously unknown can now become known. And that changes the basis for insurance. The downside of having all this data available is you've now got too much data. So you as an individual couldn't process the amount of data that's coming at the business. So we need technology to answer that question, to be able to extract meaning from those sources of data. That's one of the things that we do ourselves. Once I have meaning from it, now it's a case of, well, what does that mean for the insured? And again, we have some norms in the industry which we can start to unpick. So it's been normal that you might buy a policy that exists for 12 months. We see this in your own car insurance policy or travel insurance policy. But why does it need to be 12 months? Because I don't travel continuously through the year. In fact, if I look at my policy, it has limits to how often I can travel. So wouldn't it be great if I could just sense that you were abroad and just offer travel insurance? So your risk as an individual changes through the year and through what you do. So wouldn't it be great if my commercial risk, so if I have a vessel, if my risk changes on the vessel, so does my policy. I might go into a high-risk area and come out of it. So wouldn't it be great if that could be sensed and adopted automatically? And the third area of digitization is how that business is placed. And today in the market, it's primarily done on a manual basis. We sit here overlooking the Lloyd's office and the Lloyd's building. And the way that business is written today is it's very paper-based. People walk in with bundles of paper and they negotiate a deal. If I take those 3 things, that model can't persist either. Because if I'm going to have real-time insurance, for example, entering into a war zone, I can't have a broker just stood outside, Lloyd's going, right, quickly running, go, go round and get that business stamped. That's not going to work, but I can do it electronically. So this sort of confluence of technologies, we put it like the flux capacitor, is actually more accurate pricing, gives me the ability to write some very narrow policies, which I can now get placed in near real time. And again, we've seen that whole change happen in other industries. And probably one of the nearest examples we have to the insurance industry is actually the gambling industry, the gaming industry, the betting. Because here you have people putting bets on for an uncertain outcome. There's an analogue or a parallel to insurance there. And what we've seen when we look at that industry is we've seen those 3 technologies come together. We've seen the fact that having a placement platform allowed new sorts of products, and those products there are the sorts of bets that you might want to place. So historically I've been able to place a bet that Tiger Woods might win the Open. But now I can place the bet that Tiger Woods is going to put the next shot in the water. Well, what changed? What allowed me to place that bet? Well, I didn't invent gambling. That wasn't invented. That's always been there. So what was the change? And the change was that actually the technology allowed those odds to be calculated in real time. So it created a new type of product, a new type of policy, and it allowed it to be placed in real time as well. Because again, why couldn't I do it before? Well, I could if I could run down to the high street, convince the guy to give me a price and get my slip placed. That would be great. But again, he would have hit the shot by then. So that sort of confluence of technologies brought about that sort of interplay. And today, if you look at the gaming industry, that was introduced 10 years ago. If you look at what's happened in the last 10 years, it's grown, compounded by 10% a year, something like that, to be a different industry. But more fascinating is 80% of their revenues today are in-play betting. So this is a product which didn't exist 10 years ago, is now dominating the market. And so when we talk about the revolution, I look at it actually not so much as revolution as just displacement. So that business will displace. So what do we think that's going to pan out into the insurance industry? I don't think in shipping I'm going to see products that say, oh, iceberg ahead, Who thinks they're going to hit it? Who thinks they're not? Bet they hit the iceberg, bet they miss the iceberg. It's not quite how we see it playing out, but we sit in an environment today where there's been a storm, Hurricane Florence, which is just about to sort of touch land in the US in the next few days. But actually there's a market that says, well, actually the storm could go this way or it could go that way. So now I can see that there's an opportunity in the reinsurance market to place that sort of spot reinsurance. And the more accurate the data I have underpinning that, the more accurate that might be. So we can see some really strong parallels coming into the industry, which is ultimately going to drive new products, revenue growth and profitability for the industry.
So how do you think the digital revolution is going to help with the reconciliation in the insurance industry?
So we've seen announced in the last few months an initiative by one of our partners, Ernst & Young, announced an initiative with Maersk, the world's biggest shipper, for a product called Insurewave. And it is that platform, Insurewave, addresses the digitization of those records and how money is moved in there and whether someone's insured and certificates and issuing of certificates, etc. There's an event last week, in fact, a gentleman called Lars Henneberg, who's the Chief Risk Officer for Maersk, said that something like 75% of all the work that his department does in terms of getting insurance placed is paper trail, just administrative work. And that all goes away with the digital environments. That administrative work, 75% collapses down to 5-10% of the work. And that's a massive change. And I think that benefits the entire industry. Nobody wants to have large swathes of administration in their organisation. So digitisation of the records actually goes a long way to reducing those costs. So again, if you look at the digitisation specifically around claims and all the data available, one of the things that you can conceive of, we have this running today, is that actually not only do we automate the administration, but we can automate the payout. So if the data says that an event occurred, then why doesn't the insurer just pay? So a simple example might be a return of premium, such that if a vessel has been laid up in port for 30 days and the customer is entitled to get a return of premium, then that's just automatically paid. So why wouldn't that just be done on an automated basis? And today that's not only is that possible, but that's actually being done.